In this video, you will learn how to trade volatility indices using only $4. You will also be learning the best asset that you can use to do this magic on the chart. This asset that helps you to trade with very low risk, that it can raise a very small account like that. You will also be learning how to trade them using a very unique trading strategy in the market. A strategy that will help you to grow fast using very small accounts. I will also be teaching you how to trade with a very good risk management. Now let's get to this. Alright guys, I have been trading Deriv synthetic indices for more than 7 years now, and I can tell you Deriv synthetic indices is the only hope of a trader. If you are a trader that don't have this big capital that all these currency pairs require for you, you don't want to see your trades get stopped out from the market all the time, then Deriv synthetic indices is for you. Every single day that I wake up in the morning, I know that I am going to be making profit, myself and those in my VIP signal group. These synthetic indices that you see, do not play with it because they may look very simple to trade. But if you don't have a good trading strategy, there's no way that you're going to make profit from this market. When I started trading Deriv synthetic indices, I started with a very low capital. I started with even less than $4 when I started trading. Although I blew some accounts, but when I started making profit, I think my deposit that time was $4. That is why I want to teach you guys in this video how you can start trading synthetic indices with as little as $4 in your trading account. And this is going to sound crazy, but it is very possible. Now, the first thing you have to do if you are experiencing Deriv synthetic indices for the first time, let's say this is your first time watching a video about Deriv synthetic indices, the first thing you have to do now is to get your account ready so that you can start trading synthetic indices. Now, if you want to register your trading account with Deriv, we have the link already in the description box below, so you can click on the link, get your account ready, and then you start making money from these synthetic indices in the market. Now, with that being done, the next thing you want to do when you enter synthetic indices, like for example, in the context of this our video today about how to raise your account with as little as $4, you have to get the current assets that will be able to help you to increase that your $4 balance in your account. So the first thing you do is to look out for currency pair, is to look for the assets that will help you to grow that your $4. And I tell you, the asset that I will refer to you guys in this video, they are so great that you can be able to raise your account even if it was only $2 that was in your account already. So if you follow everything I'm going to teach you in this video, you will see yourself raising small accounts as though it is nothing. Now, the asset that I want you guys to trade using this $4 balance is number one, jump 75. Like currently you can see me, I'm on jump 75. The second one is jump 100. Jump 100 also helps you to use low risk in the market. For example, if you are using the lowest risk here, which is 0.1, look at what you are doing. Look at the space, look at this space, and it is only 0.77, $0.42. You see the big space. So you'll be able to raise your account comfortably if you are trading with this asset. Now, the third one is volatility 75 1s. Although jump 100 and jump 75, they are less risky. So this one here, if you use the smallest lot size, which is 0.05, look at the space. Look at the space in between. Although this one is a little bit high, but it is still one of the lowest risk assets on Deriv synthetic indices. So borderline about it is that if you want to trade more comfortably, I prefer you go with jump 100 or jump 75, because these are the ones that will help you to risk comfortably in the market. Oh man, sorry about this. Now, when you have those assets in place, like I told you guys, jump 75, jump 100, and if you want to, you can use volatility 75 1s. Now, to trade this, it is not just by knowing the asset. You need to use a trading strategy that have very low risk in the market. So with this low risk trading strategy, you will be able to trade your market comfortably, and you will also be risking even lesser than what I just showed you guys. Now, one of the best trading strategy for small accounts is support and resistance. Now, some people will be like, okay, that one is an old strategy, but there's nothing old in trading. When you use a strategy, if it's working for you, then it's working for you. So that is how it is. If it is the light at the end of your tunnel, that's your light. You don't go looking for another light. You focus on that light and you move out of that your tunnel. But, and you move out of that your tunnel. So what you do now is that I've already taught you guys how to draw this support and resistance line in my previous video on support and resistance. So I'm not going to be stressing myself to teach that in this video. All right, so here we have a support zone. At this point here, we have a support zone. This is our target. So it is when the market returns to this line that we know we are looking out for something. Let me draw something on it. So this is our target. When the market gets to this zone. So if you are trading the support and resistance and you already have your line, when the market gets to this zone, now some traders will tell you that if the market gets to this zone, you should start trading immediately. But that is not how it works in the market. The best way to do it when you are trading support and resistance, especially for a very big, wide market structure like this one. Now, if you observe what I did here, you will see that I shows a very wide market range. Why? Because if we get this structure right here, our take profit target is going to be at the top here, which is insane. It's crazy. But this is how you raise your account fast. You don't want to trade strategies that will give you very low risk ratio. So you look for a one that will give you like wide risk ratio for your trades. So that is the kind of support and resistance that you trade in the market. Don't go for the smaller ones like all this little support and resistance zone. You go for the wide one so that you can be able to make your profit purely. Now, when you are at this point here, what you have to do is to get a good entry. But some people will be like, when the support and resistance, when the market touches here, then you start looking for an entry. But that is not good, because when the market is coming down to this zone, it is coming down with a lot of force. Like the sellers are really forcing it down there. So it is very hard for you to just enter here and start making profit, because the sellers are really involved here. They are moving it with so much strength. So if you trade the first move that touches the support and resistance zone, 90% of the time you are going to see your stop loss get hit, because the market does not work like that. When the market touches the support and resistance zone, you have to wait for something that will like slow it down. I call it like a brake. The way you have a brake for a car, that is how you also have a brake for this strategy. You need something that will slow the power of the sellers down. And to do this, you need a double top and a double bottom. So the market is moving down here with so much force. Then it now touch the support zone. As a wise trader, you don't have to take the market immediately it touches that zone. What you do is that you wait for the market to give you a double bottom. So if you want to buy, you need a double bottom. If you want to sell, you need a double top. So right here now, I have a double bottom here. You can see I have a double bottom here. So this double bottom is what I'm going to use as my break. So this is going to like slow down the power of the sellers, and then it gives me a candlestick entry. So when you get this, the first thing you do is to look out for what you will see here, the candlestick reaction here. Now, there are two ways you can trade it. It's either you take the first momentum candle that appears after this. You have to make sure that the market breaks below the last low, like it the low of the double bottom that you have already seen here. So when it breaks that low, that is where you start looking out for an, a candlestick entry. So right here, we have this momentum candle here. What is a momentum candle? A momentum candle is a candle that have more body than the wicks. So when you see a candle like this one, which has more body than the wicks, then you know that it is time to enter a trade. But if you see the candle having more wicks than the body, that means it is not a good time to enter the trade. The second way to do this is to wait till you see an engulfing candle. You see this here? This is an engulfing candle here. So it's either you take this momentum candle, then you place your stop loss lower than this momentum candle here, or you just wait for an engulfing candle like this one that fully engulfed the last candle. So when you get an engulfing candle, that's where you can trade it, or you trade from the moment you see a momentum candle. Now, let me show you something very, very important here. So when you want to take your trade, look at this. You place your stop loss below the momentum candle. So let's imagine now you have a $1.02 risk. If you place your take profit, so this high point here, your $1 risk is going to be giving you $14. That's $13.99, is almost $14. And even if you raise it to the highest point here, you'll see that you'll be making $14.28. One trade like this can change your trading account for life. So this support and resistance trading strategy is what you're going to be using to grow this small account. It's very, very simple. And if you want more trading strategies, I've taught a lot of trading strategies with volatility indices. One of the major things is that you should know that you are risking low when you are trading with small account. So you should understand your risk before you enter a trade. If the trade is too much than the risk, let's imagine you are using that $4 to trade. $4 and you're risking like $1 per trade. That is like risking that is like you have $20 and you're risking $5 per trade. That is, you divided it by 4. So once you trade with discipline and you risk very less in the market, there is no way that you cannot grow. And if you have a trading strategies that won't be hitting your stop loss all the time, you will make your profit. And this trading strategy that I've just shown you is very, very simple. But once you start checking them out on your charts, you will see the strength that it has in the market. So you do the same thing with Jump 100. You look for good areas of support and resistance, and you use the same strategy that I just showed you guys. It's very, very simple. If you want to join us in the VIP Signal group, the link is in the description box below. You can click the link and you join us in the VIP Signal group. And if you are new to Deriv synthetic indices, the link is in the description box below, so you can register your account and start making money from the market.